Welcome back and thank you once again for remaining with us. Smart 24 TV is the channel. My name is Anthony and this is Financial Markets. With Terrence Tumwine, Senior Research Officer at the CMA, we are breaking down for you the quarterly bulletin that is for the third quarter of the CMA performance review. And we have different sectors. We've looked at what the regulatory landscape is like in the third quarter. We've looked at some of the new licensed agents and so on. Now let's cross over to the collective investment scheme. Mr. Terrace, what do you have for us in this performance review for the CIS in the third quarter?
Thank you very, very much, Anthony, once again for having me. The CIS has grown again, close to about 10% growth over the period. But ultimately, I think when we talk about the CIS, we're also looking at growing the level of savings. Growing the level of savings. For an economy to grow, it's important that the basic level of savings improves. Why? Those savings, once there's a saving, then it can be channeled to productive sectors of the economy. If there's no saving, that speaks to a negative saving culture. Just imagine, you cannot be able to grow as Anthony if you don't have a saving. Because if everything that you're earning and you're spending, you cannot be able to grow. Because if you save, then you can't be able to invest. If you can invest, then you can be able to earn more. So it's just a cycle of, so ultimately, the point is we need to grow the level of savings. And that also goes back to the tenfold program that the government is trying to be able to encourage. The growth, the GDP to savings is supposed to be able to grow. Right now, as I speak, we're at about 50 billion in savings. So we're trying to be able to grow the economy to about $50 billion. But we want to be able to grow the level of saving in a bid to be able to channel that savings to catapult growth to about $500 billion in about 15 years. And that's very, very ambitious. So we have to be able to grow the level of savings within even the CIS as well as the NSSF, whether the pension, to be able to cause that catapult for growth. So even as we celebrate the 3.5 trillion, which is close to 950, almost $1 billion, there's still work to do. There's still work to do. We're just touching the surface. So yes, we're at 3.5 trillion, but we must be able to grow further this level of savings within the Ugandan economy. And yes, we can be able to do that together. Through continuous engagement, through continuous sensitization, education opportunities that we get, we're able to do that through online platforms, X, all social media platforms, to be able to drive the level of knowledge up.
When you look at also the CIS managers, the particular performances, the individual performances, all of them almost have had a positive change as well. Are they innovative? Is this because of the innovation, especially in terms of technology, or what's driving this particular growth in the CIS management as well?
So in the CIS managers, we see that, first of all, they continue to engage. We've seen their democratization of the message on these very, very, in simple terms, in simple language, in different media houses, even some as small as, just to be able to democratize this in different languages. And they have been able to go out, they've been able to use billboards to be able to do the same. They've used social media to do the same.
The visibility.
For some of them, we know one of them, I think, has a branch. We know that they continuously engage to be able to push and drive growth in the CIS. So yes.
I would actually say I would commend them for coming out, and especially in terms of advertisement, trying to tell people exactly what they are doing and spreading the message. Does this have also maybe an after effect on the market entirely? Because we know CIS managers invest heavily within the markets, the fixed incomes, the stock market. Have we seen this increase in the assets under management also translate into better performance elsewhere? In our markets, yes.
In our markets, yes. If you see where they are largely invested, a large portion of their funds are invested within the different asset classes. but more so within the government securities as well as other asset classes
Yeah.
across the region. So yes, it pushes performance. We've seen an average return of close to 11 to 12, roughly, about 10.5 to about 12% returns, which is annual returns. So I need to qualify that because someone may think it's monthly returns.
Yeah.
But yes, annual returns. So we continue to see a bit of good performance on their side. And the fact that it's open-ended, it allows you to be able to exit as and when you're interested in. Yeah.
How different, because the bulletin also specifies the fund management performance. We had the CIS managers and then the fund managers. How sometimes these two confuse.
Okay. Just to look at, so there are two licenses.
Okay.
There's the CIS managers. The CIS managers are the people who build, how can I put it in a simple way? If you are investing, it's open-ended to allow you to be able to invest short-term and be able to liquidate your assets. Now, for the fund manager handles assets on behalf of the pension schemes. So there are quite a number of pension schemes. When we talk about pension, many people look at just NSSF.
But there's so many.
There are other.
They're about 60 something.
Yes.
Or 70
yes,
actually.
that are licensed by the UBRA. But for them to be able to manage the money on behalf of the pensioners, scheme, they get a license from us. So yes, as we speak right now, the assets under management, if you check the quarterly bulletin on page 19, for the quarter ended September, assets were about 4.7 trillion that they had in assets under management for those different pension schemes. So yes, there's the CIS managers, but then there's also the fund managers that handle pensions on behalf of their clients. So yes.
When I look at some of the fund managers, they are synonymous to the CIS managers. Yes. Does that mean they just have another maybe subsidiary that handles pension and the other one that handles CIS?
Just look at it this way. There's some hospitals that you go to and you see they are given a license to handle dental services. Yeah. They're given a license to handle obs-gyno services. It's the same facility. Yeah. They're given a license to handle a pharmacy, for example. So there are 3 different licenses, but it is the same institution. So that's in simple terms that I can be able to put it. So yes, all these are given licenses to be able to operate. Yes, they can choose to be, and some, well, there's some that are even, there's one that is a broker, there's one that is a CIS manager, but also given a license to be able to handle, yes, CIS manager and the broker, yes. So yes, and then there's another one that's, they're quite a number, yes.
Yeah, amazing. Thank you so much, Mr. Terrence. Our time is fast spent. However, the conversation continues, and we hope to have you back and keep on preaching the message of the capital markets. Thank you so much for sparing time.
It's always a pleasure.
Amazing.
For having us.
You're welcome. Thank you so much, Terrence.
Have a good one.
You're welcome. There you have it, ladies and gentlemen. That was Mr. Terrence, a very great man from CMA, Senior Research Officer, and he has been helping us analyze the third quarter performance or review in the eyes or lenses of Capital Markets Authority. You can get this bulletin. Please, I would advise you, get this bulletin, read it, share it, and make sure you start investing. Take action and take possession of your future by investing under protected investments under the Capital Markets Authority. That's it from us tonight. I'll catch you next time. Have a good night. Bye for now.